Hello, good evening and welcome to Biz First in Focus. It's D-Day tomorrow for Prime Minister Ranil Wickremesinghe. He is facing a decisive vote of no confidence in Parliament, which will follow a marathon 12-hour-long debate on the no confidence motion. While that is happening in the political arena, how is Sri Lanka faring economically? How are the government's economic reforms delivering on the results that were promised? To discuss this and more, we're joined by Travis Gomez and Nimesha Jayakodi from Frontier Research. They're both product heads at Frontier Research. Thank you very much, Travis and Nimesha, for coming on Biz First in Focus today. We've seen, Travis, the government undertake soon after it came into power in 2015, over the past 3 years, a slew of economic reforms were undertaken. They promised tax reform, the Securities and Exchange Commission, they promised reform in the capital markets, in the foreign exchange sector. How has delivery been in terms of these reforms over the past 3 years?
Yeah, so if you take these acts, I think overall the government's the view has been to sort of like, this has been something they've been talking about a lot in terms of like reforming and revamping some of these existing laws that have been there so that it suits the sort of the modern economy and the current state of Sri Lanka. So I mean the main ones that I talked a lot about are the Inland Revenue Act, the Securities and Exchange Commission Act, as well as the Foreign Exchange Management Act. So if you take at a very broad level, if you look at the sort of what the policies are trying to achieve, all of them are very positive in terms of, if you take for example the Inland Revenue Act, I mean it's in line with their objective of trying to streamline the whole tax process and to make it much more transparent. Then if you look at the Foreign Exchange Management Act, what they're trying to do again is to sort of simplify the process and to sort of reduce the sort of the controls. So I mean even in terms of the way it's named, from exchange control we're moving to exchange management. So it's kind of like to signal this clear shift away in terms of a different way of thinking. When it comes to the Securities and Exchange Commission Act as well, they're trying to make it more inclusive in terms of to make sure the regulation is across all of the market participants in the capital markets and to sort of to enhance the protection to the investors. So when you look at a broad policy level, it's all very positive and it's fairly improvements that you actually need to see further developments. But always, I mean, the question is really when it comes to the implementation. So even with the Inland Revenue Act, I mean, so what we are trying to do is to shift from indirect taxes to direct taxes through the policies, but the implementation can be a bit slow and there might be some departmental issues in terms of when it comes to the implementation. So on the ground, at the policy level, it's all mostly been well received by most parties from all sectors. It's mainly when it comes to the implementation, it might be a bit slow, or you know it might take some time to actually see the effects being reflected in terms of the macroeconomic numbers.
You say it's been well received, that the reforms agenda has been well received, but is that a reality though? When you look at the opposition that was there even to the Foreign Exchange Management Act and the opposition that we're seeing now to the Inland Revenue Act, which was passed last year but only came into effect on the 1st of April. Is this protest warranted? In terms of the act, are these, let's say the Inland Revenue Act, for example, you can see a lot of opposition against these bills coming now. Yeah. There was opposition even to the Foreign Exchange Management Act, and on the surface at least it appears the message that was given to the public is that this is good for the economy, that this will help in the liberalizing of the economy, in making things function better. But there's still sort of opposition to such measures. So does that mean that the bills, that this sort of reform agenda is being welcomed?
So when it comes to the adjustment, there is always costs involved. So even when it comes to tax, I mean, one wants to get taxed more. But I mean, some of these are in line and something that you need to do at the current state that we are in terms of the macroeconomic position of the country. These are necessary reforms. So in terms of, if you take the Inland Revenue Act, I mean, you need to see this shift happening in terms of our revenue to GDP is quite low compared to other comparable countries. So there's a need to increase that. So the way they're going about it is by sort of broad basing the tax base, and through that eventually to sort of reduce the tax burden on individuals by making it more broad based. So at a broad policy level it is, but I mean, to get to that stage in the interim there can be pain in terms of the shifting of those tax burdens from the different groups. So it's something you need to sort of contend with.
Nimesha, on the subject of taxes, one of the sort of levies that the banking sector was not too happy about was the levy on transactions. What is the current state of this levy on transactions? It was proposed through the budget, but it's not been implemented as yet.
They are actually still discussing the proposal. The banking institutions with the regulations, they have been discussing right throughout these past few months, and I think the outcome of these discussions is that the transaction levy is more likely to be enacted, and of course the original plan was to have a 20 billion revenue to the government through this, but it could actually be closer to the 30 billion range from the various revisions that they are proposing.
So what are the transactions that this levy will apply to? Is it all transactions across the board?
There was a lot of confusion regarding whether it's cash transactions, non-cash transactions, or both of it. So I think the specific portion that is going to be taxed is not yet properly decided. But I think more likely than not it will be based on the total transaction value.
So now the government is expecting revenue of 20 billion,
yes,
from the transaction levy on banks, and if I believe a few days ago the Minister of Finance said that the changes that have been brought in through the Inland Revenue Act will boost government revenue by a further 30 billion. Are these realistic targets?
There is a lot of questions, concerns whether these can be implemented. It's not really the policy that is in question, but of course the implementation of it. You increase the tax net. Are people going to avoid taxes more? Are companies or individuals going to find loopholes in the tax system? As soon as taxes increase, the tax net is widened. This is the sort of problems that come up. There can be more tax evasion than before. So whether or not this 30 billion increase is going to come through to the government depends on how well they are going to implement what they've been talking about, how the administration will actually get into this and target who needs to be targeted, and how the collection process would work, whether it's simple enough for people to understand it and be willing to get into the tax net. So.
Do you think it's justified for the government to be taxing? I mean, as Travis mentioned earlier on, we see that the banking sector has been performing well over the past several years. For the financial year 2017, Bank of Ceylon has reported a profit before tax of 30.3 billion rupees. So these are vast sums of money that the banks are taking in at a time when the economy has been slowing down. Over the past 5-6 years, the economy has been slowing down. That growth rate has been getting smaller and smaller. In such a backdrop, do you think it's right for the government to be taxing the banks that are making these sorts of profits?
Well, of course, the reasoning behind is from the government's end is, of course, that the banks are profitable enough and the banks are resilient enough to be able to pay up this tax, which is exactly what Travis was saying. They are targeting those who can pay, simply saying. So why not take in the banks is the question that the government has raised. So if you look at the banking sector performance over the past few years, they've been quite resilient. They've been earning profits. Their profits have been growing right throughout, whether it's the war, the droughts, all the other weather changes, the elections, banking has been a sector that has been resilient to all this. They've overcome the challenges quite well. So if you look at, you say that the economy has been slowing down, there has been a slowdown, so of course this has affected banks as much as it has affected the other sectors. But given the strategies of looking at alternative revenue sources, not simply looking at the net interest income, which is the traditional revenue source, they are looking at fee-based income, they are looking at what they can do with digital avenues and how they can cut costs, whether so many branches, so many people are required to run these operations. So all of this has helped them to keep their profits up.
Do you feel that this levy will have a detrimental effect on the growth of the banks? Is it difficult to say?
Yes, it's difficult to say, of course, but what I feel is, like they have been doing in the past, banks will probably be able to take it up and absorb this levy.
I'll come back to that in a second. There's an interesting saying, from the point of view of the government: if it moves, tax it; if it stops moving, subsidize it. Is that the sort of policy that the Sri Lankan government too has adopted? And as Travis and Nimesha were talking about, implementation has been where this government has been found wanting at the best of times. All this and more coming up after the break.